Mackenzie Johnston with Cattle News Central, bringing you your March 8th cattle industry headlines. Brought to you by AgRisk Advisors. They provide risk management programs to livestock producers all across the West. Whether you are concerned about price or weather risk, AgRisk Advisors, they are here to help. With current day market fluctuations, you and I both know there is nothing more important than locking in a price floor on your cattle. So if you'd like to learn more about an LRP, reach out to an advisor today. Also sponsored by American Beef Producer Magazine. They offer in-depth articles on a wide variety of topics within our industry. They feature award-winning photography and so much more within their publication. If you'd like to check out their most recent edition, their March edition, I encourage you all to click on the American Beef Producer link above in the caption. That's going to take you over to their Facebook page where you can check that out. American Beef Producer Magazine, guiding beef producers for over 25 years. And finally, Circle 5 Cow School. If you're wanting to learn how to preg check your own cows or start AIing, Circle 5 Cow School is the way to go. Almost every week they are hosting classes somewhere between Texas and Tennessee. If you'd like to check out their schedule, head on over to their website, circle5cowschool.com. That is the number 5 in there, or you can go ahead and just give them a follow on Facebook. Steve Cornett recently featured Iowa cattle feeder and commodity broker Brad Kooima of Sioux Center, Iowa, in his recent Q&A article for drovers. As many of you know, Kooima has been heavily involved with intra-industry discussions to hopefully find ways to improve cattle price discovery. He has been and he continues to be very outspoken in favor of mandating minimum levels of cash trading in hopes of providing a base point to set cattle prices for those who piggyback off cash sales to price their contract cattle. So I'm not going to go over all the questions that Cornett asked Kooima in this article. It's pretty lengthy. I encourage you all to check it out though. It is a very well-written article, I guess you'd say, but it's not written by Cornett. It's basically Brad's thoughts all laid out in this article, and Brad does a fantastic job of explaining his stance, his thoughts, what we need to do to improve our cattle markets, what we need to do to improve cattle price discovery, all of that. I did post this article on my Facebook page, so all you got to do is scroll down on my Facebook page and you can find it. But I'm just going to hit the high points of this article, go over that, and that'll give you a gist of what it's all about, hopefully. So Cornett first asked Kooima how he is so sure that more spot trading will improve cattle prices when Stephen Kuntz and Texas A&M University economists claim that we have enough cash trade. These studies have produced legitimate results. Why can't we just rely on their recommendations? So according to Kooima, back in November of 2021, we saw some interesting fundamentals with slaughter levels exceeding levels we hadn't seen for almost 3 years. We had average weights above the year before, and boxed beef dropped over $25 per hundredweight at that time. At the same time, we saw cash prices improve anywhere in between $12 to $15. The industry saw this improvement in cash prices because negotiated cash cattle was also higher than previous years at that time. Kooima would like to see a study that uses current data and question what the cost is to the cash market and cash trader as the number of AMAs increase. That would be a heck of a study. According to Cornett, after NCBA launched their voluntary program, there was a lot more trading in commercial yards. So if this is the case, why does our industry need mandates to increase cash trade? To this, Kooima said that both Kansas and Texas, primarily Texas, has increased their cash trades, and they need to be commended for what they have done. The inclusion of negotiated grid into the cash trade category is largely why we saw the jump in cash trade after NCBA's voluntary plan was implemented. The important thing with negotiated grids, according to Brad, is that they must be negotiated. Later in the article, Kooima went on to explain that he isn't wanting to ban AMAs because a lot of people, I think, have went after Brad for saying that he's just totally against AMAs. But he does think that within our industry, we need to strike a balance between cash trade and AMAs because, as you and I both know, when it comes to fat cattle trade, it is just overpowered by contract deals, these sweetheart deals that we have going on within our industry. He would like to see that all cattlemen, including cow-calf operators, have the opportunity to thrive together. In conclusion, Kooima said that rural America depends on the independent, non-corporate operators. Those folks, the independents, they're the reason that people choose to live in rural America. They're the ones that he continues to fight for. They are the key to the future of sustainable farming, as well as being a pillar of financial, social, and cultural strength in rural America. I'd like to commend Brad for everything he has done for our industry and continues to do. The fact that he is fighting for all of us independent producers is greatly appreciated. So when I posted this article on my Facebook page, there were a few comments as to why did Brad ditch his original support of the 5014 bill, requiring packers to purchase 50% of their cattle, negotiated trade, and deliver them within 14 days. And I didn't reply to any of those comments, but I'd have to say, Brad probably switched his stance on that like a lot of others did as time went on, when he realized that there was no way that that bill will ever pass. There's no way when we have negotiated cash trade down south, 4% down in Texas, that might be a stretch. I am not certain on that number, but it is dang low. So I'm sure he just switched his stance to something that is attainable. And I know a lot of people say it's just something. It's not going to have any impact. And when we talk about this, we're referring to the Fisher-Grassley bill. But at some point in our industry, we have to get something passed. We cannot continue to bang our heads against the wall and just see things slip away. I agree. Yeah, we need to hit a home run. But to start off with, maybe we should start with a single or a double and just see what we can get done. Because if we just continue to bang our head against the wall, hoping for, that home run, that 5014 bill, and I agree, it would be great. But if we just continue to bang our head against the wall and don't get anything done, we're just gonna go down the same path as the chicken and hog guys, vertical integration. At some point, you have to realize that you have to get something done before it all slips away, even if it's not perfect. It's a start. Drovers has reported that on Sunday night, commodity markets made historic moves as crude oil topped $130 a barrel, hitting its highest price in 13 years, and wheat topped a 14-year record trading above $13. Along with that, March soybeans climbed past the $17 mark, and March corn climbed all the way within 20 cents of $8. However, I'm sure as many of you watched the markets on Monday, both March corn and March soybeans backed off a bit off those highs. The conflict between Russia and Ukraine began just under 2 weeks ago, and at that time, crude oil was trading somewhere between $90 and $95 a barrel. Since the conflict has started, we've seen crude and various other commodities skyrocket. Tommy Grisafi with Advanced Trading is beginning to question if we start to bring up the word hyperinflation. It's probably about time. On CNN Sunday, Secretary of State Antony Blinken said the U.S. is considering a ban on Russian oil imports in coordination with European and NATO allies. This news comes at a time when bipartisan members of Congress are asking for a full embargo. So if the U.S. were to cut imports of Russian crude oil, overnight we would probably see fuel prices increase about 50 cents a gallon. Pretty significant. Of course, this increase, it would not just impact you at the pump. It would fuel inflation across the board, from food to parts to clothes to equipment to shipping costs on anything you buy online to everyday products you use. Everything is going to go up because of this fuel increase, as we all know. And I have talked a lot in the past week, 2 weeks, about how we continue to essentially finance the Russian war machine by continuing to buy oil from them. I don't think we ever should have started in the beginning. We should always be energy independent, but that's a conversation for a different time. But if we are going to cut off Russian crude oil, which I do agree with, as long as we have a plan here on our own soil, as long as we start drilling oil, as long as we get the wheels rolling again. And I understand we just can't do that overnight, but we better have a plan to open up that Keystone XL pipeline. We better be offshore drilling. We better get back to drilling on public lands. We better be mining coal left and right. We need to be energy independent, or else we are going to have a straight up crisis here in America when it comes to fuel or heating costs. Finally, Successful Farmer has reported that on March 5th, USDA's Animal and Plant Inspection Service, also known as APHIS, confirmed highly pathogenic avian influenza, also known as HPAI, in a commercial lay flock in Cecil County, Maryland. Then on March 6th, another case was discovered in a commercial mixed species flock in Charles Mix County, South Dakota. Both of those flocks are currently being depopulated. The USDA has not released how many birds in those flocks will be affected by this depopulation. With these two flocks reporting HPAI, the total number of U.S. states currently dealing with bird flu outbreaks is 12, including outbreaks in Missouri, Connecticut, and Iowa just in the last week. According to the most recent APHIS and World Organization for Animal Health data, the total so far for depopulated birds in the U.S. may be as many as 2 million. That is all I have for you guys this morning. I hope your week is rolling right along. You guys have a terrific Tuesday. I'll catch you later.